Hey, soldiers, the residential real estate landscape is being disrupted. About 80% of real estate agents will disappear in the next 3 to 5 years, guaranteed. Also, the landscape is changing with regard to home ownership. There are going to be a lot fewer home owners out there, and there are going to be a lot more institutional owners. Okay, so your neighbor's house might be sold to an investment firm like BlackRock. Now, how responsive do you think that investor group is going to be when they let the grass grow or the music blast or invite undesirables into your neighborhood? How responsive do you think BlackRock's going to be? Or do you think they'll just look at it strictly from the standpoint of profit? Well, I think you know the answer to that. So let's take a comprehensive look at the good, the bad, the ugly of this new real estate paradigm that is developing. We're going to take a look at what's happening with regard to the investor, the homeowner, and the real estate agent. All right, let's start off with the real estate investor. How are things going to change for them? Well, according to MetLife Investment Management, institutional investors like BlackRock, Blackstone, Fidelity, State Street, they're going to own 40% of single-family home rental real estate by 2030. So they're going to come into a market that has traditionally been dominated by small mom and pop investors, people who have gone out, purchased a home that they are residing in, and then said, hey, we got some extra money. Let's supercharge this American dream and get either some income by, going ahead and purchasing a property and renting it out, or rehabbing a property, buying it at one price, rehabbing it, and then selling it for a higher price. Well, looks like this was a great idea, so great that the institutional investors are going to come in and, according to MetLife, absorb 40% of that market by 2030. 2030 is not that long from now. So what is that going to do? Well, on the one hand, it's going to drive up cost for residential real estate investment opportunities. So you're going to find that, like what Walmart and Target did for the mom and pop, little shop that sold knickknacks and whatnot, or what Lowe's and Home Depot did to the neighborhood hardware store, these big investment firms are going to do to investment real estate. This is going to, over time, turn into a game that very few individual investors can play in, a space that few of them can play in. If you've got the money coming from BlackRock, then there's no way that someone at our socioeconomic level can compete with that once they get their eyes on a property or set of properties that they want to own. So what is an investor to do? Well, there is this new idea out there called fractional real estate investing. Now, there are a lot of things that we're out there able to take part in on a fractional basis. You can own fractional shares of a private jet, okay? Of course, we talk about fractional shares of stock all the time. That's another option for you. We also now have the ability to invest in loans on a fractional basis. There are plenty of applications out there that allow us to do that. So if someone wants to borrow $1,000, we can say, all right, I'll chip in $200 to that. And as long as that person pays that loan back, we get a return commensurate with what we invested. So the fractional paradigm is here to stay, right? It's not going anywhere. Now we're seeing fractional ownership of residential real estate in the form of this new company called Fractional. Now, Fractional is backed in part by the National Association of Realtors. It also has some other backers as well of the celebrity variety. Now, I always tell you guys, you got to be very careful. All that glitters ain't gold when it comes to these celebrities, right? We saw that with the Sam Bankman-Fried fallout with FTX. We're also seeing it with one of the DJs up in New York City, DJ Envy. is, trying to sort out some things that, was he just a celebrity endorser? Did people get the wrong impression? That sort of thing. Nonetheless, we got Will Smith, Kevin Durant, Eugene Marinelli. I'm not sure who he is, and Packy McCormick. Okay, great. These are people have invested in this. It's all good. But at the end of the day, it shouldn't mean a damn thing, because some questions need to be asked here with regard to uh, their mission to make real estate investing accessible. Okay, I will take the notion that by accessible, they're meaning, everybody can't go out and qualify for a mortgage loan. Okay, and that's usually due to cash flow, credit, things like that. So they're saying, hey, come on, we should be able to break these residential real estate properties up into shares, all right, essentially. So you'll own a portion of the property. But real estate investing is usually not that clean cut. Where in the world are these properties going to be located? In what types of neighborhood? What types of rentals are they going to demand? Is this going to be a Section 8? Okay. Is this going to be high dollar? Something in between. Now we can see here it says we're on a mission to make real estate investing accessible. Investing shouldn't be exclusive. Real estate has always been one of the most sought after asset classes for professional investors, but for the average person, real estate is intimidating and inaccessible. I'd say it's more so inaccessible for the reasons we mentioned. Impediments to credit and the resources to either go out there and just buy the property, manage it if you're renting it, or rehabilitate it if it needs some updating and you want to flip it, right? People are discouraged by daunting terminology, a lack of connections, and extremely high cost for entry. Okay, I will concede that there is a barrier to entry, a financial barrier to entry for real estate investing, unless you look at doing it through a REIT or something like that. Fractional, this company, says it was built to unlock greater access to the real estate market. Look, that's all well and good. I'm not a fan of how these companies try to dress up everything in this, ultra virtuous speak. All right, you're trying to come up with an inventive way to make money. I get it, and yes, it is true that this will make it more accessible to smaller investors. But again, where are we renting from? Who are we renting to? What areas are these properties in? I can tell you right now, if they have a portfolio that includes parts of Baltimore City, I would stay away. When you invest, do you get the opportunity to specify where your money goes? Finding strength in numbers. We're driven by the radical idea that real estate investing can be simple and collaborative. I believe it can be collaborative, absolutely. So, for the investor, beware. All right. This is here, gives you an opportunity. It's just like any other investment. You've got to do your due diligence. You cannot let the fact that they've got a picture of Will Smith and Kevin Durant on their website substitute for your due diligence and figuring out whether or not this company has a good business model. Remember, there were plenty of people who just said, hey, look, Tom Brady's endorsing FTX. That's enough for me. And they invested based on that alone. That's what they did. Now, so there we have it for the investor. Now, for the agents, they are offering real estate agents the opportunity to bring them deals. And if they bring investors to fractional, the real estate agent will be compensated for that. They will get, last time I checked, about 3% or 25% of fractional's one-time fee, okay, which equates to 3.5% of the purchase price. Now, look, I also want to bring up the very real possibility that this particular company and companies like it may ultimately be responsible for the disruption of neighborhoods and the decrease in property values. And you're probably thinking, Tyrone, come on now, how's that supposed to happen? Well, if we're going to become a nation of renters, because we've got high interest rates, we've got inflation in everything, including home prices, we've got stagnant wages. Okay, so people are finding it more and more difficult to be able to afford that first home. And if you are having a problem affording the first home, that locks up the market. People can't move. So, was Klaus Schwab correct when he said that we will own nothing? Okay, forget the be happy part. There's no way you're going to be truly happy if you don't own anything. Remember, Klaus is still going to own plenty of things. Okay, he's going to own plenty of assets. But with regard to the home, which is an asset. I've heard plenty of people say the home is not a financial asset. That's not true at all. Anytime you can exercise leverage to purchase that home, so if your home costs $100,000, you only have to put down 20 to control it. Anytime you can do that, anytime you can take equity out of the home, anytime you can get up and decide that you're going to rent that home out for um, income. Yeah, that's a financial asset. It also happens to be an emotional asset as well, because you do need a roof over your head. And this is a place where you build a lot of memories. So for the investor, the homeowner, okay, the homeowner is looking at possibly uh, waking up one morning and 40% of her neighborhood is now rental properties. Okay, and is that going to happen overnight? No. But can it happen? Absolutely. And I'm not sure if this company is in some way going to be affiliated with the BlackRocks, the State Streets. Are they going to package these loans in such a way, or these investment products in such a way that they can then sell them to the larger institutional investors? There are a lot of questions here, okay? But I want the soldiers of finance to think twice before they glom on to this idea that they don't need to own a home. Let's talk turkey here. The other financial benefit of owning a home is that you can ride the appreciation wave if your home does appreciate, okay, over time, which a lot of times we've seen exactly that happen. Now, there are a lot of variables in there. It's got to be in the right neighborhood, right? Can't have a Walmart go up right behind your house. That might not do wonders for it. Can't have an extension of a major highway come through your front yard. But all other things being equal, homes usually appreciate, right? So you're not going to find that in a rental situation. The other thing is you're not going to realize stability in terms of the payment you make for housing in a rental situation. You're not going to find that. Some will say, oh, well, you won't have to do the maintenance, you won't have to cut the lawn. Yeah, but what you will see is rental inflation annually, and that will quickly outpace inflation, and it will also quickly outpace your ability to stabilize and be comfortable in a mortgage payment. Okay. We can start off at the same, my mortgage payment can be the same as your monthly rent. Okay. And in 3 years, all the lawns in the world, all of the changed light bulbs in the world won't bring me up to the level that you're at in terms of the payment you're making. So that's going to impact your cash flow. Do I like this fractional investing idea? Well, I love assets, and I do think this democratizes that real estate sector, just like this company Fractional said. We're going to see more of these companies pop up. But I do think that this could be a big time detriment, especially if we see softness in the housing market and the only buyers are institutional investors. You could turn around really quick and realize your neighborhood has changed, your values have stagnated or have started to decline. I've seen that. And you can also get into a situation where uh, you are just locked into a perpetual state of non ownership, a state in which you have to come out of your pocket every month in perpetuity, where at some point the mortgage holder is going to pay their mortgage off. All right, guys, we'll continue to monitor the situation. I'll talk to you soon.